Hi, ADC here of Purchase Rationale and also the author of Trend is Friend. Good day. The date today is 8th of February 2023. It's Wednesday and it is 3:11 p.m. Malaysian time. Purchase Rationale rationalizes 15 reasons when considering a particular stock. Disclaimer before I proceed: whatever I do and share here is purely for information and education only. Should you take action to buy a particular stock discussed, please first consult a financial planner or a licensed broker. Okay, the stock in question today is one that I have revisited the fourth time today. And the stock is MSC Malaysian Smelting Corporation 5916. So there is a slight retracement uh, as it has hit the target of wave one the other day back in, let's see, 27th of January. It has retraced to the MA21 line and is a rebound. I'm revisiting this stock again because I think it will proceed onto the wave three. All right. So I'm not going to share the fundamental, but I'll just take a look at the chart, and then I will leave it to you to watch the video that I have redone on the revisit of video the revisited video of the third time, and see if what I discuss here suits you. All right. So let's take a look at the chart. As you can see, in the previous time, MSC has actually hit the target at what I call the Elio Wave 1 apex, has retraced down to MA21, the red line here, all right, and is now did a cross here, a doji cross, and today it seems like uh, the price action is going to ascend going forward. All right, on Helio wave number three. All right, so I'll just say that if you buy today at 205 with a price target of 1 ringgit, 3 ringgit and 69 with a cut loss of 1 ringgit and 55, you will have a reward to risk ratio of 3.35 times, which is good. Trend wise, you can already see there are multiple higher lows. Volume is a little bit not encouraging yet, but apparently there are some volume here being built up, but not to the state of what I call bias intact. All right, and ROC, to look at momentum, it has crossed the zero neutral line on 16 December and has stayed above the zero line ever since. All right. So I'll leave it to you to watch the revisited video, and this is the fourth time. All right. Now, if you think the trading idea I shared today is informational and educational, please like, share, and subscribe. Okay. When you like, it helps the channel grow. When you share, it will allow others who are interested to watch the video too. And if you do subscribe, it will definitely you will definitely receive future videos that I make, future new videos that I make, All right, and they will be automatically shown on your YouTube channel. Okay, thank you for listening and your time. Have a good day. And good day. The date today is 9th of January 2023. It's a Monday and the time is 1:28 p.m. Welcome to Purchase Rationale. Purchase Rationale provides 15 reasons when considering a particular stock. Disclaimer before I present that whatever I share here is purely for information and education. And should you take action after my sharing, besides considering as information and education, first please consult your financial planner or a licensed broker. All right. Today actually marks the first day of changing my strategy of investing, because I will also now include the magic formula together with the acquirers multiple into the fundamental aspect of valuating a particular stock. All right, meaning uh, how to get a cheap stock with good quality. All right. uh, and then also to use the technical part to further refine the entry into buying that particular stock. Right. So anyway, the stock in focus today is actually MSC, Malaysian Smelting Corporation. The stock code is 5916. And let's get to the magic formula discussion together with the acquirers multiple uh, to now actually evaluate if this stock is worth your consideration in terms of value, that means cheapness in buying the stock, and also the quality in the fundamental. Okay. Now, in normally magic formula, we look at two parameters. That is the operating earning yield together with the ROIC. Now, if you add these two particular parameters together, metrics together, operating earning yield is 8.6%. If you add the ROIC of 22%, you get about 22 or 23%. Not normally for me, I will consider anything that is above 15% of combination these two as what I call uh, a stock of good quality and good value. All right. Anyway, 15 is just an arbitrary figure. All right. First, because it needs to first cover quite a few things like the opportunity cost of interest from the bank. All right. And also to consider the EPF dividend yield of about 6 to 6.5%. Okay, 15% is only considered worthwhile taking more risk in investment compared to the money market. All right. In any case, the acquirers multiple enterprise normally, which I normally use enterprise value to EBITDA, is below 10. It is about 7.9 or around 8. So basically, both these parameter qualifies in terms of magic formula and also in terms of acquirer multiple to satisfy what I call the fundamental aspect of investing in a stock. Okay. Now, one of the requirement or one of the conditions to be fulfilled by the magic formula is that the PE ratio should be above 5, but no more than 10. In this case, MSC is only 5, 5.014. And still, it provides a dividend yield of about 2.15%. It has a positive free cash flow on a trailing 12-month basis of 133 million. Okay, what of a little bit concern is the net debt. Okay, MSC has a net debt of 338 million. Well, I consider this acceptable with an explanation because MSC is a iron ore refining factory. So normally, factory or industry of such nature requires high capex and high investment. So I would suspect they need a lot of borrowing to spend on capex to run the business, and we'll look further into that. Okay, but a high debt is only viable if they can service the interest on the debt. In this case, if you look at the F score of 7, meaning the factory is actually running on what I call, because score 7 means it is efficiency on profitability and good management. So the confidence of managing that is there. All right. Coupled with a high operating yield and ROIC, okay, which was the magic formula we discussed earlier. All right. And normally, also a high debt will also imply that the company has a higher probability of going bankrupt. In this case, the Z score or the Altman Z score measures potential bankruptcy within 2 years. In this case, the Z score is above 2.5, which is 3.05, meaning MSC in the next 2 years will not face any probability of bankruptcy. All right. The other requirement that is required by magic formula is company must fall within the range of 500 million to 2 billion. All right. So in this case, MSC is 684, so it is within the range. And normally, too small a company has its related difficulty, and too large a company, say above 3 billion, also will have some growth related issues. Okay. Uh, this, despite the fact that it has a debt to EBITDA, meaning how much debt to the earning before interest and tax plus depreciation plus amortization is more than 2 times. Okay, but this is compensated by the current ratio of 1.5. Not normally, companies with high debt will have a bit of concern if the current ratio is below 1.2. In this case, MSC is above the 1.2 at 1.5. So meaning it is likely that they are able to manage the servicing of their debt through the operating earning yield. Okay. All right. This is just basically a relative comparison because magic formula uses the formula of EBIT over enterprise value. But because trading view does not provide this parameter, so I just put this one because enterprise value over EBIT is actually the inverse value of EBIT over enterprise values. So in this case, if you just roughly take a relative comparison, you see that enterprise value over EBIT is 8.5, 8.48. And if you just divide it to convert it into the inverse, that means EBIT over enterprise value, you can say that it is about 8.5%. And if you compare it to operating value, earning yield, it is about 8.65, close to it, close to it. So meaning that there is actually a differential of 2%, 0.2% uh, that is accrued to depreciation and amortization. Okay. Uh, okay. Let me explain a little bit on why there is such a big difference on earning yields compared to operating earning yields. Okay. You can see operating earning yield is about 8.65% compared to earning yield of 19.95. So you can see there is actually a vast differential of about 11% or 12%. All right. This is most likely caused by because operating earning yield is looking at just purely the business side of profit. The earning yield here most likely include investment earnings or uh, borrowing earnings, right? Earnings by borrowing. Okay, so that is a differential in this case. Anyway, I'm just using it for comparison. Normally, I prefer to use operating earning yield because this one reflects the business more reflectively, right? So I would say overall, this on the valuation fundamental side of the company of MSC, this is a relatively stable, good investment grade stock with good value, and also besides good value means it's cheap on the stock price, also with good quality. All right, good quality on the management side and the operating side. Okay, let's look a little bit on the sentiment side. All right, so as usual, uh, normally if I just purely do what we call trend following strategy, all right, I will never buy a stock if the price action is below what I call the MA233 line, because this one indicates between a bullish and a bearish market. All right, but because I have considered the magic formula together with the Aquarius multiple to roughly assess what I call value of the company and also on the quality of the company, so I can compensate by taking more risk against the fundamental side of the company. All right. Okay. Now in this case, anyway, I still follow some rules of the trend following. You will see that in MSC there is also one higher low here and one higher low. So definitely a trend is already formed, albeit it is still below the MA233 line. All right. Uh, and there is also a golden cross over here. All right. So momentum wise, you can see that first the price action or the candlestick is just breach the Ichimoku cloud, right? And you can also see that the ROC, the rate of change, has just also breached the zero neutral line, and it has stayed above there. So there is also a confirmation of the momentum. All right. On the Elio wave side, I have managed to draw the microwave. You can see that actually now MSC is riding on the impulse wave 3, microwave 3. All right. And the entry strategy is normally I don't use it in my trend following strategy, but in this case, because like I said, I have compensated the fundamental side with magic formula and also the Aquarius multiple. So I will now take more risk technically by employing what I call the MA rebound strategy entry, right? Taking more risk, more return, but only if I compensate it with the fundamental side of things. Okay. So if you decide to buy MSC today at the closing bell of midday, just now half day, at 1 ringgit and 63 cent. All right, actually has increased 6 cent since this morning when the bell opens, and when the bell rings to close half a day, it has already increased about 6 cent or 3.8%. Okay, price ascension, right? If you buy it at 1 ringgit 63 with a target price at apex of wave 3, impulse wave 3 at 2 ringgit and 21 cent, with a stop loss of 1 ringgit and 43 cent, you will have a reward to risk ratio of 2.98 times, about 3 times, which is good. All right. Anything above 2 to 1 is always a good decision. In this case, MSC is giving you 3 times. All right. So if you think my trading idea today on MSC is informational and educational, please like, share, and subscribe. If you share and subscribe, it helps the channel to grow and also allows others who may be your friends, relatives, or other fellow investors who may be interested to take a view of some good trading ideas, in this case, which is MSC. Uh, so they may also be interested to watch this video too. All right. So support me, help me. Kindly like, share, and subscribe. Thank you for listening and also your time. Have a good day and bye bye.